to go. Good afternoon, everybody. Thank you very much indeed for joining us on this last afternoon of the AFSIC conference. My name is Richard Putley, and I'm co-founder and CEO of Executives in Africa. One of the things that I've heard throughout both yesterday and this morning has been the lack of access to talent needed to work within organisations, and I'm pleased to say that's something we can help you with. So if you haven't done, or if you have a problem with talent and you haven't done already, or you'd like to, then please do come along and see either myself, my co-founder and CEO, Sarah Fitzmaurice, there, and the team which are at stand P13. So this afternoon runs from now through until 5 o'clock. I think the last session starts at 5. There is an overarching theme throughout the next 3 hours, which is going to be about growth. And during the next 7 either solo speeches or panelist discussions that we've got, we're going to be exploring various aspects of growth. The panelists and the speakers will be demonstrating how growth can be and needs to be impactful, sustainable, engendering, environmentally and climate protective, as well as being educationally driven. So, kicking off this afternoon's first panel discussion, I'm very pleased to be able to introduce David Krivanek, who is Program Manager, International Development, the Impact Investing Institute. Over to you, David.
Brilliant. Thank you very much. And thank you very much for joining us this afternoon. We know we have the post-lunch slot, so we know we have to keep everyone energized, which we will do in our discussions. As mentioned, my name is David Krivanek. I work at the Impact Investing Institute, which is a non-profit all about making capital markets fair and working better for people and the planet. At the Institute, we have a big focus on mobilizing private capital to make sure that it goes to the places and towards the issues where it matters the most. Last year, for example, we ran the Impact Task Force that was backed by the UK government during its presidency of the G7, and where we came up with proposed and put forward concrete instruments to finance just transition to net zero across the globe. And this year we are taking this work forward. We have just launched something called the Just Transition Finance Challenge, which is a coalition of 20 global investors that together manage 20 trillion pounds of assets and who are committed together to finance a fair and inclusive transition to net zero across the globe. And that's a bit of the background of the Institute, but the reason why we are really focusing on mobilizing private capital to support sustainable development in Africa and other emerging markets is really, I think, the reason why a lot of us are here today and why our panelists are here today. We know that based on the current trajectory, there just won't be enough money to achieve the objectives either of the Paris Agreement or the Sustainable Development Goals in Africa. And according to the AFDB, African economies, just to give a sense of numbers behind this, will need $1.6 trillion of additional capital between now and 2030, so in 8 years, to meet climate goals. And for the SDGs, this is likely to require trillions of dollars more. There's just not enough public funding for this, so private investors definitely need to step in. And at the same time, it is actually really hard to overstate the scale of the potential for investment in Africa. We will go into some of the discussions around sectors and specific industries, but just at an aggregate level, just thinking about the fact that the population of the continent will double to 2.6 billion people in 2050. In Nigeria, you will have more people than in the US by 2050, and this obviously brings in a lot of new customers, new industries that should be of interest to any forward-looking investor and business in this room. So in Africa, you have very clear opportunities both for profit and for impact. But despite this, we have to be honest that private finance is not playing its role at the moment, and it has not gone into Africa at the scale that is needed. So there are a number of reasons for this. There's a lot of polls of investors, but the reasons that tend to come up very often is perceptions of risks, for example, economic risk, political, regulatory, legal, etc., and also some concerns about the limited pipeline of sustainable investment opportunities, and also the question of the lack of talent that was mentioned just now. But without trying, being honest that some of these risks exist and need to be addressed, I think what's really important to realize, and what our panel will speak to, is that in recent years, there's really been a lot of pioneering work that's been done by a lot of organizations that can help to address and mitigate these risks so that more investors are more comfortable investing into Africa. And this brings me to my panel today. Thank you very much for joining. I'm delighted to say that on this stage you have some of the most innovative organizations that are today really delivering some of the very practical solutions that will help to channel more private capital into Africa. So very happy to be hearing from them. So to do some very quick introductions, we have Caroline Chinhuru, who's an investment officer at Calvert Impact Capital. Arnaud Gillin, partner at Impact SA. To his left is Adrian Mill, who's managing director at ESS, which stands for Environmental and Social Sustainability, and John Letain, head of credit and political risks at Tysers, and Vinay Goodier, who's director of the Economic Development Board of Mauritius. So without further ado, we will just go straight into the panel, starting with Caroline. Caroline, you work with Calvert, which is a leading impact investor, which will be well known to many in the room. Can you give us just a sense of the opportunities that are available to deliver for investors to deliver environmental and social impact in African markets?
Sure. Good afternoon, everyone. When we think about the challenges facing Africa right now, and the large gap we still need to fill to get to a place where, Africans have access to all the opportunities that the world has to offer, we have a very long way to go. And I think, when you think some of the social issues around, access to healthcare, housing, education, and the like, and then you think about the existential crisis around climate change, I think, for us to reach the goals that we need to reach, we need to think, very dynamically, we need to think very innovatively. We can't think in a linear fashion, and one advantage we have is that we can look to some of the great solutions coming out of the world and incorporate those solutions as we think about, solving the social challenges in Africa. And I think one of the key pieces to add into our solutions when we think about solving social issues is environmental sustainability and efficiency. So, when we think in that way, I feel like a lot of the projects that we're thinking about in Africa, for solving social issues do incorporate environmental sustainability. So one example is around affordable housing. According to the AFSIC, 40,000 people move into African cities every single day. In order to, create a community that's going to be, dynamic and that's going to be sustainable for those people moving into those cities, we need to think beyond just affordable housing. We need to think about environmentally sustainable housing, energy efficient housing that's going to be more cost effective in the long run. And so I think green housing is one, example of a space where there's massive opportunity for sustainability, but also for, social impact. Another one is, very straightforward, one is around energy access. Over 500 million people in Africa right now don't have access to energy. And, we can't just think about, the large, grid scale solutions. We need to think about the smaller, innovative, solar home system type solutions. We need to think about, renewable energy sources as one way to tackle that gap and to meet that, gap while we're still here. So I think, for us to really meet the challenges in Africa, we need to build cities and we need to build communities that are going to be resilient and that are going to be sustainable, not just for, the next 10 years, the next 30, 40, 50 years. And environmental sustainability being a key part of that means that there's massive opportunity for investments in that space. And just to name a very specific, fund example, Lions Ed's Africa Go Green Fund is one example of a fund that's, tackling some of those challenges in the space and really trying to, think about, how do we support growth in Africa in a way that's going to be environmentally sustainable, in a way that's going to be thinking about, future cities, not just cities that are needed now.
Brilliant. Thank you, Caroline. I think that gives us a very clear starting point for some of the opportunities. And maybe if I can bring in Arnaud, some of your own views. This is something at Impact that you do a lot. That's the core of your business. You help to set up and support impact funds. What are some of the, completing this picture, what are some of the other opportunities that maybe this room doesn't have on their radar yet?
Yeah, good afternoon. Just complementing what Caroline just mentioned, she mentioned the Africa Go Green Fund that we actually helped to set up. We helped KfW in designing and structuring and launching this fund, and then selecting a lion's head. We started the company 15 years ago, and since 2007 we've created 30 impact funds. Started with microfinance, then renewable energy, then aquaculture. So these are still the main topics in terms of volumes, but indeed there are a lot of new SDGs that are popping up in terms of very specific, very niche investment opportunities. And you see not only the DFIs and the foundations and the high net worth individuals going, but even the institutional investors looking at these other themes. Just 3 examples. The first one being the education fund that we just launched in Rwanda a few months ago. Well, we launched it. Chanson International, who's the fund manager of the Future of Work Fund, is lending to students through an income sharing agreement, whereby the students repay the loan that they received to get to university, only depending on whether they have a job and up to a certain maximum. They've attracted 21 million, which may not seem very high, but for such a high, let's say, risky investment strategy, they found not only DFIs like DFC, foundations like the UBS Optimus Foundation, but also impact investors and high net worth individuals. So this fund is lending in Rwanda, Kenya, and South Africa. This is just one example. Education is really high on the list, you mentioned it. Education, health, conservation is the other topic. We talk about climate change, climate mitigation, renewables, etc. But nature-based solution, carbon credit, forestry, all these community-based biodiversity protection funds, they're really being on the top of the list of most impact investors. So a year ago, we've helped, again, KfW together with the Nature Conservancy by onboarding on our fund management platform a fund called the Africa Conservation and Communities Tourism Fund. And basically what the fund is doing, it was a COVID response that is lending to ecotourism and biodiversity conservation operators locally throughout Africa to help them go through the issue of the lack of tourists during this period. Because all these reserves, all these ecotourism operators, they have a great impact on biodiversity by protecting biodiversity. Another topic that is really high on the agenda is indeed conservation. You see a lot of money flowing into that these days. And a third and last point, because I can talk forever, but gender lens investing. There was a panel, I think, just before. Gender lens investing is not a topic in itself. It's a way of investing. It's a way to select and filter your investment by promoting women-led, women-owned, or women-focused SMEs in general. And the DFIs have so got together to create a 2X challenge. And the 2X challenge has a commitment for 11 billion to invest into gender lens investment funds. And so we are currently helping a trust, Gracia Mashal Trust, to create an SME-focused gender lens investment fund out of Mauritius. So you see, out of the, let's say, usual suspects like financial services, renewable energy, agriculture, which are definitely needed, but you see all the SDGs being covered, and you see most of these impact investors targeting there, saying, well, our role now is to move from the relatively easy investment strategy into the more advanced ones.
Excellent, thank you. I think that's a very helpful way to capture where the market is at, where the opportunities are, and that maybe, hopefully it has elicited some curiosity perhaps from this room, which is where, Adrian, I would love to bring you in, because this is what you do. You help some investors to better navigate the sort of landscape in Africa, identify the most impactful and sustainable opportunities. So what can investors do to maximize their sustainability impact?
Thanks. Yeah, look, impact. What is impact really, and how are we measuring it? I think one of the most questions I'm most asked generally is, how are we getting that data? What is the impact data? And in fact, it's really important for us to even step back a little bit, because even in our industry, I mean, ESG, sustainability, there's so many words, sometimes we don't even define them very well. And there's a lot of crossover, obviously, the overlap. So an example would be just the idea of ESG. ESG, and this is important for everyone to understand, is about risk and compliance. Okay, so before you even get to the impact part, you have to make sure, because in an African context, many of these organizations and companies, investees, they may not even be at that basic level of managing their risks appropriately and being compliant with national and international standards and frameworks and guidelines. So you have this one thing on risk and compliance, which is very important, and then you talk about impact, which is the real, when people talk about impact, they're really talking about sustainability. And we have frameworks like Sustainable Development Goals, and there's reporting frameworks, TCFD, etc. I mean, there's a huge list of different competing, overlapping, etc. Guidelines, frameworks that address sustainability. But sustainability really is about aspiration. So in a risk and compliance world, I can go to prison. If my dam breaks, if someone chops off a leg, right, I can go to prison. Sustainability, if I don't meet my carbon goal, well, it's a little bit of a reputational, everyone says, well, you didn't do that, but no one's gone to prison because they didn't meet their carbon target, right? Now, over time, that may change, but right now what we're talking about is simply aspirational things. No poverty. A company cannot be no poverty, right? They can't comply with no poverty. They can contribute. And so all these sustainability aspects are about contribution. And so what we're talking about in an African context, and sometimes we lose sight of, is getting to that compliance bit first, because that's the easy bit to get to, because then you're in compliance, right? And then making sure that at the same time sowing the seeds for sustainability, for the aspirational part. And so I think that's one of the things that I often make sure we talk about before we get into the whole discussion on impact investing and metrics and so forth. And we talk about metrics, and as you're moving towards sustainability, you need to collect this data. And I've seen loads of amazing companies that are starting in tech and so forth that's talking about how we can use tech and other solutions to collect data. But there's nothing like footfalls on the ground, someone counting trees, someone looking at auditing. You need people. Unfortunately, in Africa, we have not enough people with a ESG or sustainability background. In fact, it's one of the things we have the least of. Yet, we're talking about a form of accounting. I mean, ESG, sustainability is accounting at the end of the day. You're looking at numbers. You take one number and you compare it to another number. Is it more or less where it's supposed to be, yes or no? Yeah. So imagine that, but for 20 or 30 disciplines, right? Biodiversity, which has flora, fauna, you have air quality, groundwater, they're not related, right? And that's just some of the myriad of different disciplines you have to deal with. And these poor people with several years of experience are called the ESG manager and left to fend for themselves with, I might add, zero budget, right? So as you can imagine, that is challenging. And that's an understatement, because if you asked an accountant to take over 20 or 30 companies at the same time on the same pay, they'd be running out that door. So what we need to do is train these people and create this new generation, the next generation of African ESG and sustainability specialists. And that's actually how I set up my company, ESS, to generate that. And what people need, as you can tell from what I'm saying, is support, because it's big and complex and vast. And so what we need to do, and what I think investors, impact investors especially, are uniquely placed to do, is support companies like mine and others to generate those people, because then you'll have the data and then you'll be able to demonstrate impact.
Brilliant, thank you. And we'll come back to this question, I think, of measurement and also talent just after. But before we go to that, I think one thing that is very often at the top of people's minds when they think about investing in markets that they might be less familiar with is this idea of risk. And this is where, John, you have stellar expertise. Can you tell us a bit more about some of the tools that are available today for investors that are looking to de-risk their investments in emerging and frontier markets, to use that term?
Yes, thank you. Good afternoon, everyone. So I run the team at Tysers, and we work with a lot of development institutions de-risking business across Africa. At any given time, we've probably got a portfolio of about 5 or 6 billion of our clients' investments that we de-risk. So we work with MIGA, the World Bank, ATI from Nairobi, AFSIC, and of course a number of private investors. I have to say, I think the risk environment at the moment is probably the worst that we've seen since the financial crisis. Financial conditions are incredibly difficult, and the rapidity of the turn in environment since the beginning of the year has been extraordinary. I think for any of us who think back, it's, you know, you can lend to the UK government these days, you know, medium term and getting 6%. And therefore, why do people want to think about putting their money to risk in a much tougher African environment? And as a result, on the continent, you're seeing swathes of government that are now locked out of the bond markets. And that's actually very, very dangerous and very worrying, I think, particularly given that a lot of African governments went heavily into the bond markets over the last decade, and now they're facing maturities on bonds, and there is literally no way to refinance those. That's when insurance, I think, becomes incredibly important. I've always thought of insurance as the kind of secret source that underpins a lot of long-term cross-border investments into Africa, whether it's debt or equity investments. Prior to being at Tysers, I actually ran ATI in Nairobi for 4 years, and we grew ATI's portfolio from about 1.6 billion to 6.5 billion over 4 years. So it goes to show how important insurance is. And as I say, a lot of investors, and particularly governments, unfortunately, aren't aware that insurance is a critical community for them. And one of the things we've been doing is bringing finance ministers over to London to meet the insurance market. So next week we've got 6 West African finance ministers in London specifically to talk to the insurance market. This sort of thing literally didn't used to happen in the past, but I think there is a growing awareness that insurance is behind most long-term investments. In terms of the products that you can get for insurance, well, if you're a lender, de-risking is non-payment insurance. That's absolutely critical. So most of the countries at the moment that can't go to the bond markets, they're going to be turning obviously to development institutions, and a number of those institutions will use private insurance to de-risk their lending, or just simply to grow their scale. And again, private lenders will also work with insurance partners. It's really critical. So that's non-payment insurance. The other major insurance product that people tend to buy in the context of Africa is insurance to protect equity investments. So if you're investing in a mine in North Kivu, for example, which has been done, this is a project we worked on, you can buy investment insurance that will protect your asset against the risks of breach of contract, political violence, inability to convert currency, that kind of thing. So there's a number of products out there that insurance can help investors with. And one of the great things when you think about private insurance is that private insurers in particular can be quite innovative. But to give them credit, so can some of the public institutions. So insurance is very much available and is there, but the flip side is it's a tough environment at the moment, and insurers are not naive. They're quite aware of how difficult the environment is as well.
Excellent. And you mentioned there the role of governments in it as well, which I think is a perfect segue to bring in Vinay, Director of the Economic Development Board of Mauritius, as mentioned. So what can African governments do, based on your experience in Mauritius, to make sure to attract more investment in their economy, and particularly sustainable investment?
Thank you, David. I'm going to build on what everybody has said, starting with Caroline. Africa, 700 million houses to be built by 2050 because of the rapid demographic increase. You're talking about 500 million people already without power on the continent. Insurance market penetration less than 3%. We talked about it earlier in another session this morning. So basically what's lacking in Africa is that there is this perception the risk is high. There's a perception that governance is not there when they need it. And what needs to be done is really to clear away that perception and really put into place frameworks that people, legal frameworks basically, regulatory bodies, building on what Adrian said as well, to have the proper measures, counterbalances, checks. Because what's happening now, the cost of finance is high. You mentioned that. It's easier to lend to a government in Europe than trying to lend to give money to a private sector onto the continent right now. But we do have a lot of impact investors that wants to do good for the population, basically. Whether it's about social development, whether it's about climate, whether it's about environmental and so on. So for these people to invest money, they need to know that the ecosystem is working for them. So we need to be able to have counter measures. And this is one example where, for example, in Mauritius, we're currently working on a legal framework to regulate impact investment. What are the checks? Training the people, for example, to be able to go and check whether the investment is going towards society, towards the environment, and not that we're building a power station but we're cutting down 1,000 trees in the process. So there needs to be these type of checks, not just sitting and looking at QuickBooks and everything and say, right, the investment is going properly. So these sort of frameworks needs to be put, not just in Mauritius, but across many AFCs. We need to have trained people that can go and check whether whatever is being invested, whatever is being built, is it really going to add value to the life of people? Is it going to reduce jobs, reduce poverty, give people access to infrastructure, electricity, water, and so on? So these are the things that we need to be able to put in IFC, especially geared towards Africa. So tomorrow it will have better access to finance.
I think that's a very inspiring and very clear idea of what can be done. So maybe that's a good way to bring you back into the discussion, Caroline. Calvert, you have been investing in African markets for a really long time. I'm sure that you have actually learned a lot as an institution and you personally. So what would be some of the top learnings and sort of top tips you would like to share with this room on investing in African markets?
Sure. I think the two key things that we found are really valuable when you're working with partners in Africa. And so we primarily invest through intermediaries. We have one small office based in Bethesda, Maryland, in America, and we know what our core competencies are. We're really good at raising capital. We raise capital through a community investment note, and we're not the right people to be on the ground in Harare, Zimbabwe, deploying capital because that's not my expertise. Our expertise is, finding partners and collaborators that have that expertise and that have a good understanding of their community, that are working with their communities, not for, but with, and that really are going to help de-risk, the impact and the value of the projects that you're investing in by, really working closely with their partners. And so I think, in a nutshell, I'd say humility is really important in this space. Knowing what you're good at, knowing what you understand, and knowing when to ask for help, and knowing when to work with people. And then I think that the other key thing is also just honesty. We're not going to, you need multiple solutions for multiple problems. You're not going to find one problem that fits everything. If someone comes to you and says, oh, this is a great idea I have that's going to fix 15 different things, chances are they're not going to be able to fix that one thing. So I think it's being very humble and being very collaborative, and also just being very honest about what you're able to achieve, and measuring. I think measurement is also really important. And I think those pieces together, I think have been critical for us as we've grown in this space, particularly because we're working in innovative spaces where people are learning as they go. We're trying to solve some really big problems as an impact investing community. And so, working together and working in an honest way together, I think is really important to get things moving.
That's excellent. Humility, honesty, collaboration. I think these are values that we can all take a minute to reflect on. Going back to you, Arnaud, from this practical point of view as well, of like what resources are available out there, what help is available to investors who are looking to maybe get into African markets or expand in African markets, what would you recommend that they do?
Okay, big question. So back to what we do on a daily basis. So we help to set up funds. So it may look like very technically difficult to set up a fund. So what we aim to do is to get the fund initiator rid of the technicalities so that they can really focus on their investment strategy and the investors. So we tell our partners, focus on your deals and your investors, and we try to do the rest for you. So over the last 15 years, that's what we've been trying to do. So we've developed several solutions for fund initiators, because not all the funds can start and raise their first fund at 300 million, 500 million. Then you have plenty of advisors, plenty of solutions. You couldn't afford whatever complex structure you could have. You could have a feeder there and there and there, and then off you go, and you have your structure up and running. For all these strategies that we've mentioned, whether social housing, education, etc., I'm not talking about renewables, for example, you start small. You start 50 million, 30 million, 70 million. For all of these, setting up a fund is very difficult, first from the fundraising, and if on top of it they start to have technical problems on how to set it up and how to pay the legal fees for 300,000 to set up a fund, they almost stop from day one. So what we try to do is to design, so we're based in Luxembourg and in Mauritius, so we have a team of 50 people, and so we help all these funds wherever it fits best. So we really discuss with the fund initiator and say, okay, who are your investors, what do you want to invest in, and so we'll put the best structure for you in place. For example, in Mauritius, we've created a fund management platform, and basically it's an umbrella fund, if you like, where you can open up a compartment within a few weeks on an existing legal structure. So you don't have to create a new legal structure. There's already a bank, there's already an auditor, there's already a fund admin, and we just plug your investment strategy into something existing. And it's based on a new regulation in Mauritius, the variable company, so just capital company, that's it, which enables that. And on top of it, what it enables is that you can even start with a special purpose vehicle within the structure and then move this special purpose vehicle into a proper fund. So you start with 2 or 3 deals, you build your track record, you have a few investors, and after a few months only, then you can already show that you are able to invest, that it's really tangible. So investors look at your portfolio and say, now I understand what's your investment strategy, and it eases, in a way, the fundraising process. This is one solution. We've just launched another solution to say, well, fund is not always the solution. Sometimes you want to have just an investment strategy that is testing something, like I have 2 or 3 deals, social housing, 2 or 3 deals, and I have 2 or 3 investors. And they really want to invest now, but it's too small to set up a fund for that. Still, they want a structure to invest, and they don't want to directly invest. So we've created a securitization vehicle based in Luxembourg, where you can similarly open a compartment and issue a bond. And in a few weeks, we wrap your 4 or 5 investment, and then we come to your investor with a standardized legal documentation bond, which could be listed, which could be transferable, etc., etc. So there are some innovation from the technical side of it, so that I would say you, the investment manager, the investment advisor, should really be able to focus on what is important, which is convincing your investors that you have the right investment strategy. And I just want to mention another initiative that is very important, and I already mentioned the 2X challenge, so this gender lens investing initiative. They've just launched 2X Ignite, which is an acceleration program for gender lens investment advisors. So if you're about to launch, or if you're a women-led fund manager, you may apply to this initiative that is just out, and there's a selection process going on.
Excellent, thank you. And now if I can turn to Adrian, I think there's, since you mentioned ESG disclosures earlier, I think that's something that's also quite high on people's minds, is this sort of, how does ESG work in the context of some of the more emerging frontier markets, particularly in Africa? And there's, I think if you speak with some fund managers and some investors, there's a bit of a fear that as in some of jurisdictions, we move towards quite advanced and heavy sort of ESG disclosure frameworks, both on the environmental side, but also on the social side increasingly, that this might end up being quite detrimental actually to investments in emerging and frontier markets, because some of the data just is not there, and it goes back to some of the capacity issues that you highlighted. So yeah, basically what are your views on this, ESG and investing in Africa, friend or foe?
Yeah, I mean, ESG's had a bit of a bad run the last couple of weeks and months. You've seen it in the news, you know, the Republicans pulling all their money out of various ESG-led funds and so forth. Which is funny because, like, for 20 years, ESG was like no one cared. Now everyone cared, and now it's like some people don't care. So who knows where it's going next? But I mean, look, ESG disclosure at the end of the day, it's just a form of accounting, as I mentioned before, right? And auditing, it's like a finance. And again, we talk about this sort of triple bottom line. We love a good slogan and catchphrase. So triple bottom line accounting and things like this, where we try and even things out in terms of financial and environmental and social. But the reality is that we're just internalizing an externalized cost. So what does that mean? That means that, you know, certain big brands of soft drink manufacturers, for example, instead of having a nice circular system with glass bottles, well, now they have a non-circular system where you can find lovely pieces of plastic all over the continents and in the Mariana Trench to the top of Mount Everest. I won't say the name. There's many of them, right? So you can see that there is, if we have these accounting and management systems in place, all we need to do is put them in place to see these increased and improved ESG outcomes. Because what we want is a planet that works, right? And we want a society that is more or less just. And we want basic stuff. I mean, everyone wants that. No one sits there and says they don't. So improving these outcomes is key. And so when we come to talk about, all right, what's good and what's bad, what's friendly and what, I mean, again, there's no friend or foe. Everyone needs to breathe clean air. But how do we get there? So a lot of the time we talk about investors saying, right, we have this impact investment fund, we focus on clean tech, we focus on this and focus on that. Did you know that the biggest polluters are the ones who are making the pollution, right now? And so if we were to clean them up, we would get a way better return on investment in terms of an environmental and social return than we would investing in clean tech. Now, I'm not saying we shouldn't, obviously we should do them both, right? But a lot of the time we focus on how can we get to let's get these green companies up and running, but if we can change the way that polluting industries operate, maybe that particular soft drink company could go back to a circular model, and maybe instead of using fossil fuel plastic, they can create their plastics with biofuels or other things, which are less problematic. So you can see there's ways of designing your business models and readjusting existing business models to transition towards this green future that we all want. And I mean, on the flip side of this, we also talk about the transition, the green transition, right? And Africa is blessed with huge amounts of resource. I know, I live in Senegal and we're going through an oil and gas boom. It's fantastic. Things are growing like crazy, all right? And that's great. But also, it's not great for the environment. But, Africa has had this much impact, in terms of fossil fuels compared to everywhere else. So, it's not fair, realistically, to say, don't use that. But of course, it's also not fair. I mean, I'll give an example. Does anyone here still have a landline at your home? Do you pick up? No, right? We all have mobile phones. Why would you go if I need a phone, the first thing I'm going to do is get a landline. Well, why would we go and build a gas or a diesel power plant? Same deal. We can jump over that. We have access to the technology. It exists. But, they have the tools and they should be allowed to decide as countries and, sovereign countries. So I do think that, there are ways and means we have to balance things. Western societies have to give as well as take, and I think altogether, if we're all thinking about one planet, we can get there. And impact investors have, both very clear mandates to generate this clean tech and green tech and so forth that will take us to the next generation of green industries, as well as to clean up those brownfield ones.
Excellent, and emphasizing the importance of these partnerships that we can do between the private and public sector. And I think, John, you actually sat very cleverly just between the investment side of the panel and then the government side of it. So naturally, I have to ask you this question. This is something that you do a lot of work on as well. What do you see as the role of partnership really between private and multilateral investors and some of the government backs, and how that can help to drive more investment in Africa?
Thanks, David. I think in the context of impact investing, partnerships between public sector and private sector de-riskers is actually critical. And I can think of some specific examples where we've enabled, working with our partners, that kind of impact investing to take place. So in 2017, we enabled Ivory Coast to do their first ever green socially certified loan. And that was funded by a lot of offshore investors, pension funds, including from Europe and Japan. And some of these had never been into the African markets before. I met one of the Japanese pension funds and I said to them, you've never invested once in Africa. You manage 900 billion of assets. And they said, yeah, but nobody's actually yet managed to design a properly de-risked investment for us until now. And we had done that. So it can be done, but I think it also shows you how much room there is to grow because that was a 900 billion pension fund and they did a single 50 million investment. And it takes a lot of time. And the only way really that we've found that you can create the full de-risking that those kind of institutional investors need, who, after all, by mandate cannot invest in sub-investment grade markets, i.e. the majority of Africa, is to do full de-risking solutions and to do complete de-risking, particularly in the debt markets, you do need public institutions, i.e. institutions like MEGA or ATI, to front the deal, potentially crowding in the World Bank as well. So we've done deals with layered structures where the World Bank will take the first loss and then other private insurers will go second loss. It's quite complicated. It takes a lot of time. And from the private insurers' point of view, they want to see the public sector institutions there because ultimately they feel someone has to have skin in the game. And if the investor is not going to have that skin in the game, they need someone from the public sector there. So I think in the context of impact investing, blended finance, is another way of thinking about it, is absolutely critical. And of course, from the point of view of the multilateral governmental institutions, if the billions to trillions agenda is going to be achieved, they've got to be able to leverage their balance sheets. And really, I think the only way you can do that is through crowding in private sector investors. And in the context of insurance, that means crowding in private sector insurers to massively leverage the balance sheet of public sector institutions. And I mean, just to show you how effective that can be, again, when I was based out in Nairobi with ATI, we were able to leverage ATI's equity 17 times at any given moment. And the way we could do that and maintain an A rating for the institution was through crowding in private sector insurance. So I think it's absolutely critical.
Absolutely, and what a natural transition as well to Vinay. I think we had a couple very positive mentions of what Mauritius is doing actually and some of the successes it's actually already attracting and positioning itself really as a hub for sustainability and impact investment. It will be very familiar to some of the impact investors here as a place to domicile products, for example. So what is Mauritius doing exactly, and why should sustainability-focused investors really look at the Mauritius International Finance Center for their investments?
Thank you, David. I think the first thing that I would like to highlight is that, when it comes to climate change, Mauritius is considered one of the most vulnerable countries in the world. I think we're seventh in the world in terms of vulnerability when it comes to climate change. So this is something that's very important to Mauritius itself, managing climate, managing the environment. And of course, now that we have a thriving AFSIC, we scored 40 out of 40 in the FATF recently, so we managed to give the credibility and the trust that investors are looking for the Mauritius AFSIC, the efficiency as well in terms of cost efficiency. And it's about balancing the act now. It's about making sure that we are directing investment into the right development projects across the continent, as well as supporting other infrastructure projects on the continent as well. I mean, also in Mauritius, there's a lot of companies, because we have this sustainability plan in terms of sustainability energy production. For example, we want to reach 60% by 2030 when it comes to renewable energy sources. And we have, I've seen in the room, we have Mr. Jérôme de Châteauneuf also from Ciel Group, and they invest massively in sustainable energy production. We have Mauritian companies that are producing hydropower or energy through bagasse from sugarcane, and they're moving that technology across Africa as well. And these are already expertise that we have, and we want to put forward when it comes to Mauritius AFSIC already in managing and structuring the funds through the continent. And as I said, right now the Financial Services Commission and the Ministry of Financial Services and Good Governance, they are working on putting together that framework, that legal framework, so that ESG investment across the continent could be properly regulated, so that tomorrow, when your funds is going into the continent, it is going for the right project and the right things are being done. And that is something that is important, because you mentioned earlier that there is some, nobody were concerned about impact investment 10 years ago. Then suddenly it's a talk of the town. It really wants to go into impact investment. And then people want to know, are they really impacting on the life of the citizens of Africa? And that's where the Mauritius AFSIC would balance the credibility of its legal framework, and at the same time assessing what's happening on the continent so that we have credibility. So that's the mixture of one. It's about it is something that is important to us as a vulnerable island. Number two, it's about bridging the professionalism of the AFSIC. And number three is about counter-checking and counterbalancing what's happening eventually.
Terrific. Clearly, there's a lot of work that has gone into that, and we can only wish you a lot of success with that, with that work. Unfortunately, that also brings us very close to the end of this session, and I would like to thank you for these great insights, both in terms of, I hope this room leaves with a really good sense of the opportunities that are available, also some of the tools that can help to address some of the concerns you might have had coming in, the role of partnerships, the role of de-risking, the role that some governments can also help you in this journey towards Africa investment. But before we end, I just wanted to ask each of you, and in 30 seconds, that's the tricky part, to just take you one takeaway, which you might want to frame as a call to action for our audience. Maybe starting with you, Caroline?
Yeah, I would say, you know, in all the conversations around managing risk, around being responsible, around, you know, impact measurement and ESG measurement and risk measurement, I think it's really important to work with the communities that we're going into and letting them lead. I think that is the best way to make sure that you're creating solutions that are in demand and that are going to be sustainable and really help build a long-term future. So, you know, let the community that you're working with lead the solution-making process.
Excellent.
Thank you. I didn't prepare the question. You didn't ask before. Public institution could do more to crowd in private investors. We talk about it in each conference, crowding in, crowding out. I'll say that's not the place for DFI, etc. Tools are existing, and I'm not just talking about our own tools. I mean, the insurance is another tool. We talk about legal form. We talk about ESG, etc. We need more of the public institution to actually support these tools so that the private sector could use them even more. For example, we have set up out of the 30 funds 25 blended finance structures where we have a first loss from government, etc. It takes 2 to 3 or 4 years to convince the government, the DFI, to get into the first loss. And that's their job to get in there. Why not creating a fund, a first loss fund, ran by a private entity? You give the mandate to this private entity, and then in a few months, then you get the first loss. I'm saying we don't need to innovate all the time on new tools and new technology. Everything is existing, but we need a bit more support on that end so that we'll see the private sector coming in.
A very clear call to action to public representatives present here. Adrian?
Well, mine will be quick. Help us to help you to train up the next generation of ESG and sustainability experts in Africa. Because without them, you won't be able to generate or measure your impact.
Brilliant. John, can you be as brief?
I think, look, we're just here to listen. And I think having a bit of passion is really important, and trying to listen to your clients and so far as possible within your mandate, be willing and be prepared to innovate, because too few institutions are, and I completely agree, particularly public sector institutions, they very rarely innovate, but when they do, it can make a huge difference.
Terrific. And Vinay, last but not least.
I think it's about learning from the 4 specialists that are here today and build on that, and because coordinating with the team back in Mauritius to make sure that we can eventually come out with this legal framework. And certainly it's not going to be perfect, but along the way we'll learn and grow all together.
Terrific. Well, thank you very much for these very clear call to actions. And again, thanking my panelists, if we can give them a brief round of applause. And thanks to you as well for joining us today. And we wish you an excellent end of the conference.
Thank you very much indeed, David. Excellent moderation on that. And thank you very much indeed, panel, for all of your input and insights. Thank you very much indeed.